Did you know that there are two completely different VA refinance programs? And most veterans have no idea which one that they're actually being sold. One of them is built for speed and savings, whereas the other is built for pulling cash out of your equity. It's the same VA benefit with two very different tools. And a lot of lenders tend to blur the lines between the two because it's easier to sell them whatever product they're already set up to close fast. If we haven't met yet, my name is Ware, the Loan Caddy. I'm a GWAT veteran, currently still serving in the Army Reserve, and a VA loan specialist. And this video is part of my VA Loan Masterclass series where I'm breaking down the benefits that you've earned in plain English. So let's get into it. Here's the roadmap for today. We're going to talk about what an IRRRL actually is and who qualifies, what a VA cash out refinance looks like and who might qualify for that program, the net tangible benefit test that the VA requires, and then why does that test exist, the funding fee difference between the two using real numbers to show you how it works, and how to tell which one you're actually being sold before you ever sign anything. So let's start with the IRRRL. That stands for Interest Rate Reduction Refinance Loans. Most veterans just call it the VA Streamline, and that nickname's pretty accurate. This program exists for one purpose: lower your interest rate or move you from an adjustable rate into a fixed rate mortgage. That's the entire job of this loan. So here's what an IRRRL does not typically require. Number one, you're not going to be pulling cash out. Two is you cannot add a new borrower who wasn't already obligated on the original loan in most cases. There's also typically no new appraisal required, and there's typically no verification of income or employment required. The VA built it this way on purpose, because this is treated as a low-risk transaction in their eyes. They already know you've been making the payments on the VA loan, so when rates drop, they don't want red tape standing between a veteran and saving money. Now, let's talk about the cash out refinance, because this is where things tend to get a lot more serious. A VA cash out refinance lets you do one of two things. You either refinance your current VA loan and pull cash out of your home's equity, or you refinance an existing non-VA loan, like an FHA loan or a conventional loan, into a VA loan, while sometimes also pulling cash out in the same process. Either way, here's what changes between an IRRRL and a cash out refinance. A cash out refinance is almost always going to require a full appraisal, full income and credit qualification, just like you're buying the house from scratch. The funding fee, that's going to be much higher than what the IRRRL funding fee is. And first time use on cash out refinances is typically right around 2.15% of the loan amount, where the IRRRL funding fee is typically around 0.5%. And that gap matters because people hear refinance and they just assume that the cost structure is the same across the board, but it's not. This is the exact reason why the VA requires something called the net tangible benefit test. The math has to genuinely work in your favor, not just lower your monthly payment by stretching the term back out to 30 years. Not just to look good on a one-page comparison that a loan officer hands you. The VA wants to see that refinancing actually improves your financial position in a real, measurable way. Lower rate, lower total cost, or a legitimate need for the cash that justifies the cost of getting it. If a lender's rushing you past this conversation, or they can't clearly show you the break-even math, that's your signal to slow down. If anybody tells you to just refinance, you'll save money, without walking you through the new funding fee, the new closing costs, and your actual break-even month, ask them to put that math in writing before you sign anything. A legitimate lender will have no problem showing it to you. So let's take a moment and talk about that break-even number, because it's the single most useful tool that you have in making this decision. It works a little bit like this. You're going to take your total refinance costs, funding fee included, and divide that by how much it's going to save you on a monthly basis. And that's going to tell you how many months it takes before the refinance actually starts putting money back in your pocket instead of taking it out. If you're planning to move, sell, or PCS before you hit that break-even point, the refinance may not be worth doing no matter how attractive the rate looks on paper. And honestly, figuring this out yourself takes about as much effort as getting my dog to actually come when I call, which is to say, it takes a minute, but it's worth doing before you commit to anything. Caddy's tip for the day is to ask your lender for the break-even number specifically in writing before you commit to anything. they hesitate or they can't produce it quickly, that tells you something about how much homework they actually did before bringing you the loan. So what we talked about today is that the IRRRL is built for rate and term improvement. Fast, lean, minimal documentation, and a lower funding. The cash out refinance is built for pulling equity or converting a non-VA loan into a VA. It's slower, more involved, and it's a higher funding fee with full qualification required. Both exist under the same VA refinance umbrella, but they solve completely different problems. And the net tangible benefit requirement exists specifically so that veterans aren't refinanced just to generate a transaction for someone else's commission. So, which one of these programs applies to you? If you're not sure which one actually fits your situation, or you've already been pitched one and want a second opinion before you sign, that's exactly the kind of conversation Ware is having. Drop a comment with where you're at in the process. I'll read them all. And in the next video, we're going to be getting into closing costs and the 7 things that VA buyers consistently get blindsided by at the closing table. We'll see you there.